Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hi everyone, you're listening to the Weekly FX Navigator. My name is DJ, your host for the series. So riskier currencies like the Australian, New Zealand and Canadian dollar have fallen given renewed COVID-19 fears as the Omicron variant threatens to derail the ongoing global growth recovery. According to the World Health Organization, it is not yet clear whether the new variant is more transmissible and whether infection causes more severe diseases compared with other variants. While risk sentiment remains fragile, it has recovered slightly after China cut its reserve requirement ratio alongside other easing measures. Our focus is on the Australian dollar and what the outlook for the currency is after the Reserve Bank of Australia kept policy rates unchanged. So without further ado, let's dive right in. At its meeting today, the RBA has decided to maintain the cash rate at 10 basis points and will continue to purchase government securities at the rate of 4 billion per week until mid-Feb 2022. The central bank continues to reiterate that it is seeing a strong recovery in the labour market, although the pickup in wage growth is still expected to be gradual. The RBA board doesn't seem to be overly spooked by the new Omicron variant, saying the emergence of the Omicron strain is a new source of uncertainty, but it is not expected to derail the recovery. The economy is expected to return to its pre-Delta path in the first half of 2022. Ultimately, our takeaway here is that the RBA will keep monetary policy easy for now. The hurdle for a hike in 2022 is extremely high in our view, but that does not rule out Australian dollar outperformance. So let's touch on fundamentals quickly. We believe the Australian dollar is starting to look cheap on several measures. While the currency has been on a recent downtrend, there are some signs of stabilization. For one, short positioning is looking quite stretched. Terms of trade also remain structurally supportive of a stronger Australian dollar, especially since China is starting to ease policy again. Now moving on to technicals quickly, we see key support at around 70 cents against the dollar. The pair has been flopping around in oversold territory and is poised for a near-term bounce higher. We think we could be approaching an inflection point with value investors starting to relook at going long Australian dollars. So watch this space closely. And that is all for today. If you're a valued client of Standard Chartered, grab hold of your relationship manager to find out more about our publications. If you've enjoyed what you've heard, remember to like, share and subscribe. And that sums up today's podcast. See you next week.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.